So we recently had a ton of decent news that could finally potentially put Tesla stock back on the right path. Now, further on in this video, we're going to go ahead and take a look at Tesla stock from a technical perspective and kind of highlight where we're currently at and what are some things that we're going to be monitoring going forward. But I want to just kind of highlight some of the good catalyst events that we've recently gotten. Now, I want to clarify for a lot of individuals that although I've made a lot of bearish content for Tesla, especially since December 28th, when I said, look, we want to be careful with Tesla, it doesn't necessarily mean I'm a bear. I'm still long-term bullish for Tesla. I've just been saying, look, I'm patient and I'm waiting for a specific area to add into my long-term portfolio. Now, again, that doesn't mean that you guys have to follow what I'm doing, but I just want to clarify, especially because I've been making so many videos that have been pretty bearish on Tesla. Now, we have indeed seen Tesla fall down pretty much over 40% from when I initially called out that warning of Tesla kind of being a little overvalued, and here we are today. Now, I want to go ahead and cover some of the news. So over the weekend, we had this Goldman Sach research report come out stating that the worldwide market for humanoid robots is forecast to be bigger than what the original analyst stated about a year ago. In fact, they mentioned that the total addressable market for humanoid robots is projected to reach $38 billion by 2035, which is up sixfold from what they expected last year, which was about $6 billion. But the reason why this pertains to Tesla stock is because when we take a look at who is dominating in the humanoid space, we pretty much see that prominent companies driving the humanoid robotics field include established players like Boston Dynamics, Tesla, and Toyota. Of course, it also mentions other companies like Agility Robotics and Figure AI, which each are also other companies focusing on that space. But if you're wondering why Goldman Sachs recently kind of updated their ideas on the humanoid robotic space, it's really just all up to pricing. See, we have pretty much Goldman Sachs saying that mainly this is because cheaper components are now available. There's more supply chain options, and designs and manufacturing techniques have improved. In turn, this could speed up the timeline to factory applications by a year and to consumer applications by 2 or 4 years compared with what they had prior in their estimates. And so if supply chains and manufacturing has improved, well, that means that it's going to be much more affordable to make the robots, which essentially means it's going to be more affordable to sell the humanoid robots. And the reason why this is a big driver is because there's a big difference at buying one of these robots in the near future for, let's say, $25,000 compared to $150,000. Not a lot of individuals will be able to afford something that's $150,000 just to fold clothes, versus something that's a price point at around $25,000. Now, when we take a look at this diagram that Goldman Sachs laid out, one of the notable things is how far ahead the Optimus V2 Tesla robot humanoid is ahead of everything else. In fact, it's actually one of the lightest, and it's also one of the fastest. And then in terms of degrees of freedom, it's actually one of the highest as well. And so this is honestly pretty notable considering that, you know, Boston Dynamics and a few other companies have pretty much started in this endeavor far beyond, or way before Tesla actually got into the game. And so to see Tesla kind of move ahead, well, that's actually good news. But one of the things I often say is that we're not seeing Wall Street price this in, and that's because we've heard in the recent earnings calls of Elon Musk saying that there was only 6 of these bots created and it's not that easy to make them. And so hopefully that is going to be changing pretty soon. And of course, in the future, the idea is that this is going to be able to get underwritten into the stock price. Again, it's currently not put into the valuation, but this is something that could be potentially huge. Now, of course, that's in the future and that's speculation. We don't know for sure, but that's just some good news that we got over the weekend. Now, we also had some additional positive news, and that is the fact that Tesla's Giga Berlin factory has now officially been reconnected to the electricity grid following a week-long outage caused by arson. And so that's something that is honestly good news, right? Of course, you don't want to see disruption take place in one of the factories because, of course, if it goes on for too long, well, then we could see something that we saw prior back during the pandemic, like what we saw in China, where, you know, factories were closed for a prolonged period, and that kind of stifled the production of a lot of vehicles. And of course, we don't want to see that. And so this is good news that this, factory in Germany is now kind of back on road. But real quick, something else I want to highlight that I believe a lot of individuals look over is the overall health of Tesla financially, right? We see that cash and cash equivalents is pretty high. And so this means that we could see more capital flow into research and developments, which could honestly kind of stir and boost up the humanoid project. And so that's something else that I wanted to share that I think a lot of people are overlooking. Tesla, financially is pretty healthy. And so that's something that we like to see. Now, also, we had this interesting report from Morgan Stanley's Adam Jonas simply state that Tesla has been going down recently and is kind of diverging from Bitcoin. He kind of creates a story that Tesla and Bitcoin usually has this correlation. I don't really buy it, but he says that Tesla is going down because there's this escape velocity in the market and how people are chasing a lot of these other active AI names. And so he kind of goes on to state that, of course, yeah, while everyone's chasing all these active AI names, once Tesla's AI becomes active, well, that's going to be something that people are going to rush into. Now, of course, FSD is something that as a long-term investor, it's a bit frustrating, especially because we've heard year and year and year again of Elon Musk stating that this is the year where fully self-driving will actually be 100% complete, and we always get disappointed. And so I'm kind of almost, in my evaluation model for Tesla, I don't even factor in robot taxis. I know a lot of people like Kathy Wood, they factor that in. I don't, right? And so that's why when I talk about Tesla being overvalued, I'm really just talking about it from a car company and not really all the other plays that it could have, although I'm excited about the humanoids. I think that's a high possibility, but as far as like the AI, plays in terms of FSD, well, there's some skepticism there from me, right? And of course, the idea is to be optimistic and that eventually this kind of passes through. But I know there's going to be a lot of hurdles and regulations, especially with driving. For those that are not familiar to the channel, recently I was in a really bad accident. And so I could understand, the concerns and safety of people with driving and having kind of this automated software control and steer the driving of a vehicle. And so I think that's going to still take some time. And so that's why I don't factor that into my model. But of course, we're going to try to hope that's, going to come soon. But the idea is, look, I'm focusing on the fact that Tesla has a lot of cash and they're still developing their humanoid robots, and I think that's going to be the big driver for Tesla. I'm honestly kind of not even thinking about what the cars can do and really just thinking about what people are willing to pay for an affordable robot that can do a lot of your chores. And so that's something that's honestly what I'm very excited about. But I want to go ahead and hop into my laptop and just talk about a couple of things that we're seeing with the overall market. Actually, before we do so, I want to just share a snippet of what I mentioned in the Push and Profit private group this morning, in which I said that even with a recent pullback, the overall trajectory for the broader markets is upwards. And so if we actually take a look at the S&P 500 ticker symbol SPY, which is the S&P 500 index ETF, we see that, yeah, we had a couple red candles, but we're actually back into the green. And so I also want to not only just talk about Tesla, but also just talk about the health of the overall market, which also just a quick plug for those that are interested. The Push and Profit private group, there is 5 slots available for individuals to join free for the month of March. So definitely check out that first link in the description below. Be one of the first people to join. I've never done this before. There are 5 free slots. So if you're interested in having access to my daily briefings and what I talk about, what stocks I'm looking into, definitely check out that first link in the description below. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock. And one thing I want to highlight is that yes, we did indeed have a bit of a green day, but not much has changed. And the reason I say this, right, let's actually take a look at Tesla, kind of zoom in. After hours, we're pushing up a bit at the time of this recording, but we don't have any big changes. Yes, when we opened for the day, we moved up almost 4%, so it was a big jump for the day, but we pretty much just closed from the opening candle to the close about 1.3%. In fact, if we just look at it from the close of yesterday to the close of today, pretty much the same thing, right? There's not a huge move. And so where that places us from a daily perspective is that we're back in this range where there's a lot of volume relative to price. So that means that there's a lot of exchanging between buyers and sellers around this area, and that causes consolidation. And so we're kind of back to where we were when Tesla initially hit that $180 level. And that's why back when Tesla hit $180 in the beginning of the year, for January, I said, look, I don't plan on buying because I need confirmation. And what I said is I wanted to wait for Tesla to close above $204. We never had that close. In fact, one thing I like to do
is kind of switch the chart over to a line chart. I have a separate video explaining the benefits of a line chart. But Charles Dow, right, the founder of the Dow Jones, also part owner or founder of the Wall Street Journal, he loved line charts because what really matters is the close, and Tesla never closed above $204. If we take a look from, just looking at the candles, yeah, at one point it hit $206, but it was really in the after hours and it didn't close. And so that means that the price never settled above 204. There was no certainty that things were, or price action was settled there. And so that really had little substance for Tesla going as far as confirmation going up. And that's why I didn't buy, right? I was waiting for that confirmation, didn't happen. And what we ended up seeing was Tesla fall down even further, right? Now, again, I'm not a genius. I want to kind of remind everyone I don't have a crystal ball. There's no, mythical method to the analysis I do. It's simply just synthesizing technical analysis with fundamental analysis, macro analysis, monetary policy, and a plethora of other things as well, right? But it's often that I get things right, but again, it's not that I'm always going to get it right. And I like to highlight that because I think that there is a few people that may watch my content and honestly just see, oh man, this guy keeps getting it right for Tesla. I mean, I watched his videos for the last 2 years and he's pretty much called it to the point on Tesla. Look, I'm not going to always get it right, and that's why I try to map things out. And so what we did see was Tesla didn't close. And so again, I didn't buy, and here we are. And so I'm back in the same area that I said before. Until we see Tesla close above $204, that's not something I'm interested in buying just yet. I want to see that confirmation of the uptrend, and we're not there yet. And as far as buying it even lower, I want to wait to see if we fall down to this area of around $155, right? And so really at these areas, I'm not interested in Tesla. Tesla is not settled in its price action. It has to either go above this shelf of volume or below it, and that's when I'll go ahead and look into adding more. And I get comments, I get DMs, I get emails of people saying it's not about timing the market, it's about time in the market. And yes, that's 100% correct. I always say this, it's about time in the market, right? You're not going to always time things perfectly, but that doesn't mean that you have to be ridiculous with your capital. You still have to be prudent. And one of the things I like to say is that I don't like just buying the dip. You often hear people say, oh, just buy the dip, just buy the dip. But we clearly see, back when I called out Tesla being overpriced in December 28th, the dip was getting dippier, right? And in fact, we're actually still lower, right? We're actually now at, we touched 173. And so, again, you do whatever you see value in. But for me personally, I'm not interested at Tesla around these areas. Yes, we had some good news. Yeah, we had some optimism, but not much has changed. Now, we do have something coming out tomorrow that's going to severely impact the direction, no move the markets. And that's something I highlighted within the Push and Profit Private Group. And that is, of course, the CPI report, right? This is an inflationary gauge that we get tomorrow. And it's one of the last inflationary gauges that we get before the Federal Reserve makes the decision on monetary policy. Now, we heard Jerome Powell last week testify in front of Congress saying that the data is looking in favor for rate cuts, but there was still no timeline. And so, of course, the market's going to have a huge reaction to the CPI report. And then also a lot of people don't pay attention to this, but you're going to want to see what happens with the PPI report, right? The Producer Price Index. I know one time I said PPI and someone said it sounded silly, right? But it is something that we're going to want to listen to, right? The PPI report comes out, and these are the last two inflationary gauges before we actually have the Fed make their decision for monetary policy, whether they're going to pause, whether they're going to hike, or whether they're going to cut for March 19th. Now, this is, of course, straight off the federalreserve.gov website. These are the dates. And if we actually look at what the future markets are pricing in, there's kind of just a high probability that they're going to pause. But we're going to want to look at what the future markets are pricing in after tomorrow's inflationary gauge. And that's going to be, again, the CPI report. And so those are things that we're monitoring. Again, I'll go ahead and provide updates for those within the Push and Profit Private Group because, of course, there's some other trade ideas that we're also looking into. But also, I want to pan over to market structure. So I talked about the S&P 500. It recently had a red day, but this morning before the market opened, I said, look, we do see things still going upwards, and indeed we did see the market push up. Now, was it a huge move up? Not necessarily, right? We're honestly still slightly lower than the day prior, but we're still seeing some green candles. And one thing I like to look at is market breadth. And one thing that we're going to see is that when you take a look at the sectors, and let's go ahead and pan over to a daily time frame, we see a green candle, right? Although it's not, pretty much a doji candle, so it's very minuscule. But it's a green candle for consumer discretionaries. Okay, well, it's holding up. We see financials still looking pretty solid, which is interesting because we know that the bank term funding program is ending. Yet we're still seeing a lot of these companies in finance and the financial sector still hold up well. Okay, well, that's good. We saw tech had a big dive the other day, but it kind of rebounded. So that's also good, right? We're still lower than the last trading session, but tech is honestly holding up. And then lastly, healthcare is also pushing up or holding up as well. And so things structurally don't seem out of balance. I know I went into more details within the Push and Profit Private Group, talking about levels within the S&P 500 index. But I think I can go ahead and reserve that for those within the Push and Profit Private Group. There's no need to make this video any much more longer, especially because I'm trying to keep this a video about Tesla, but I think it's important to see how the overall market is performing as well. But with that said, before you guys go, consider hitting that subscribe button and also check out this next video right over here talking about line charts. And I'll see you guys on that next video. Take care, guys.